SBC Media.
Welcome to the iGaming Daily podcast, analysing the news from the betting and gaming industry all over the globe, supported by Optimove, the #1 CRM marketing solution for the iGaming market.
The UK and the Netherlands betting industries have a lot on their plate regarding payments at the moment, as policymakers in both countries prepare to initiate finance risk checks as an essential part of the customer journey. These are not the only countries where we've seen significant regulatory developments, however, as this week the Financial Action Task Force removed 4 countries from its grey list of countries with strategic deficiencies in their anti-money laundering and counter-terrorist financing frameworks. Welcome to this episode of iGaming Daily, where we're putting 2 of our teams together to talk about these issues. I'm Callum Williams, and I'm here with my payment expert colleague Ted Orme-Claye, and a former payment expert team member who's been dying to speak to me and Ted for weeks. Now on SBC News, Viktor, where we're going to talk about the significance of the FATF grey list and also touch on the issue of affordability checks. So how's it going, guys? Good weekend. We'll go to you, Vic, since you wanted to speak to us so much.
Yeah, thanks, mate. Thanks for finally accepting my request. It's always a pleasure to be here, so thanks for having me.
Good. Do you have a good weekend?
Yeah, not bad. We went pretty quickly as always, but yeah, glad to be back in the office.
Good. Ted, how are you? How's your weekend been?
Yeah, not bad, thanks, mate. Just also like to say, yeah, it's good to have the boys back together. It's good to be working with Viktor again, as always. And yeah, weekend was decent. Yeah, watched a lot of football, to be fair. Obviously, there was the League Cup on. Yeah, ate a lot, drank a bit, the usual, you know.
Yeah. That sounds like a good weekend to me.
Yeah.
But before we get into the podcast discussion for today, this podcast is brought to you by Optimove, the #1 CRM marketing solution for the iGaming market. 56% of the EGR Power 50 personalised player experiences with Optimove. And as a special offer, Optimove are offering new clients a free first month when they buy Optimove. For more information and to claim the free month, go to optimove.com/SBC. That's optimove.com/SBC. Links will also be left in the podcast episode description below. Also, a shout out to anyone interested in attending the Casino Beat Summit Malta. Early bird tickets are still available for the price of €400. The event is taking place between the 21st and the 23rd of May at the Intercontinental Malta. We'll leave some links in the description below also. So Ted, the FATF grey list, there's been some removals, as we've noted at the top. Can you just explain to me the significance of these, well, who's been removed, and then the significance of these removals?
Yeah, sure. So the FATF, well, first off, I guess I should explain what the FATF is. It's the, as I said, it's the Financial Action Task Force. It's the AML and CTF unit of the G7 groups. That's Canada, France, Germany, Italy, Japan, the UK and the US. And countries that are put on its grey list, it's not actually referred to as a grey list by the FATF itself. It's more of like an external term that, well, people such as ourselves use and a lot of the financial industry use. Countries that are on this list are, as you said in the intro, deemed to have strategic deficiencies in the AML and CTF frameworks. And I think obviously the main implication for these countries there is that it's just not really a good look. You know, it's not a good PR to be on that sort of list, especially if you're looking at building up your economy, getting investors, building up a financial sector. So the list is quite extensive, but yeah, just recently they made the decision after a recent meeting to remove 4 countries from that. These are Gibraltar, Barbados, the UAE and Uganda. So basically they will have been assigned a action plan by the FATF with some certain objectives to reach regarding their AML and CTF frameworks. By the looks of it, these have now been achieved. The FATF is satisfied with what they've seen. And those have been taken off, which I'd imagine is quite a relief to the authorities and any sort of financial regulators, financial stakeholders in those countries. Yeah,
it's surprising you mentioned. I mean, to me, the most surprising one's probably Gibraltar, right? Because the amount of betting operators that have set up shop over there, it's quite a big, large betting hub for many operators. So Vic, could you just talk to me a bit more about the removal of Gibraltar from the list? Why is this so significant, and what does this mean in particular for the gambling sector?
Sure. The gambling industry, like you mentioned in Gibraltar, is pretty big. Gambling accounts for around 28%, I think, was the last time I checked, from the country GDP. So A lot of operators are located there. When you start from Betfred, William Hill to Viktor. Just to name a few examples, Gibraltar actually hosts 70%, give or take, of all UK betting, so it's a pretty substantial gambling market. Of course, as any gambling market, financial services are really important to the country, and I think it goes without saying that if a country is on the grey list, a financial institution would have to think twice about working with a corporate entity on that list. But now that Gibraltar has been delisted, they can worry no more, of course. What else that I can say? The country has previously been praised for its AML robustness, so the step to delist it from FATF's notorious list is another evidence that the country is moving towards the right direction in terms of eradicating illegal operations there and criminal activity.
Yeah, it's a good point you mentioned there, because also Gibraltar is well known to be a British overseas territory, right? So the UK is one of, if not the biggest and the best gambling markets around. So there's that seamless connection there, Ted. What can you now expect from Gibraltar? And also in the same light as Malta, what can Gibraltar learn from Malta in forwarding and accelerating its market?
Yeah, I think that's a really interesting comparison to make there, Callum, to be fair, because obviously, Malta and Gibraltar both have some quite significant parallels on this, and that Malta is also, a Mediterranean island, which is home to a massive financial services sector. Gambling is also a very significant part of that. Maybe not as significant as Gibraltar, as Viktor just noted. It seems, I think Gibraltar gambling accounts for a much higher level of GDP than in Malta. But Malta is still very significant, and the authorities are very aware of that. Malta, for a couple of years, was on the FATF grey list, but were able to secure a delisting quite quickly by, I'd imagine, pursuing the same sort of action plans that Gibraltar will have been assigned. They were able to reach the milestones. The FATF recognised that and removed them from the list, which the Maltese authorities have noted was, quite a big moment for the island, quite significant. It's similar to Gibraltar. A lot of companies are based there and a license there use their MGA licenses to operate internationally, because it has quite a good standard and a lot of I get a prestige, maybe for want of a better word, associated with it. So recently Malta published its national risk assessment, I believe it was called, where they talked about AML risks to the country, and they emphasised that even though the FATF ruling and their delisting from the grey list was very significant, they still need to be very aware of threats to their financial services sector, the banking sector, the payment sector, as we've said repeatedly, the gambling sector. I think Gibraltar should probably pay quite close attention to that national risk assessment and maybe apply any lessons from it to their own scenario to ensure that they keep off that grey list. Obviously, also it's interesting that, with Gibraltar being a British overseas territory, that I just find it quite interesting that the UK is a G7 country, and the FATF, being a unit of the G7, has then had one of its own territories grey listed by that same unit. Yeah. I just find that quite a bit unrelated to what I just talked about here, but I think that's just sort of an interesting circle round, isn't it?
Well, also that seamlessness that I said before about the UK and Gibraltar, it's the financial services also, with the UK being a leader in fintech and, instant payments, open banking, there's also that seamless connection there. So I don't see why many of the operators in the payments field, in open banking and such forth, can't then come over to Gibraltar and then start to work on developing those financial infrastructures. But Vic, just turning to the UAE for a minute, they've also been removed from the grey list. We talked about in the past, iGaming Daily, I think it was us three, I believe, about the UAE and the potential for that to become a betting market. Yep. I know the Win was the Win is in the process of setting up a casino resort there. So, is this a significant moment for the country and its ambitions in the finance and fintech sectors? Because there's been a lot of developments over there recently, haven't there?
Well, yeah, first of all, I want to say that it is a good thing that you don't have an international watchdog's finger pointing at you all the time and saying that you're bad for business. This is, of course, comes first. Second of all, the UAE's ambitions, which to some extent have already been achieved, to become a global financial hub. How do you do that? You have to diversify your economy. You must start building your economy with foreign funds, which, mind you, found their way to the UAE in large amounts, even under the grey listing. But nevertheless, given the latest FATF assurances, I think that investors can now sleep a bit easier and perhaps even double their capital flow to the UAE, knowing that their money is not being sent to criminals, and speeding up the reaching of Sheikh Mohammed bin Zayed's goals for the country.
Yeah, you've definitely seen a lot of that with a lot of Middle Eastern countries as well, like your Saudi Arabia's, for example. Qatar's just not even talking about payments for a second, like sports, what they're doing to bring over the Western audience over there as well. So, yeah, we're going to wrap up part one there, and then we're going to take a little break. And then after, we're going to talk more about the FATF grey list and financial risk checks for some other countries.
Brazil, a global economic powerhouse, deeply passionate about sports, and now home to one of the hottest markets in gaming. And we're giving it the full SBC treatment. Join industry leaders, market experts, and all the major players in the country for 3 days of content, exhibition, and epic networking at the first ever SBC Summit Rio.
And we're back, and we are looking at the rest of the FATF list. It's noticeable, Vic, that Bulgaria, your native Bulgaria, is still included
Bulgaria,
there.
Yeah. 1994, the World Cup, everyone remembers.
Why do you think they're still included on this grey list, and how can Bulgaria get off the list?
Well, it's a very nuanced question. Why are they included? Because the country has recently undergone a lot of political instability. There have been accusations going back and forth that top country officials have been in bed, if I can say that, with high-level individuals from the gambling sector, complicit in money-making schemes. The most recent case is, which is actually still ongoing, is a former lottery and sports betting tycoon being questioned over allegedly claiming preferences by a former prime minister. There's also another recent case where the government launched a probe against the former president of the Bulgarian Football Union, investigating potential match-fixing conduct and links to overseas criminal syndicates. So from everything said so far, you can imagine that it's not a good look for the country, definitely. Having said that, the Bulgaria has taken steps towards the right direction recently. Changes to the country's Gambling Act in 2020 gave the National Revenue Agency full power to oversee the gambling sector. Since then, it has managed to chase a very large number of unlicensed operators out of the country, which of course reduced the AML risk significantly. There's also been increase introduced to licensing fees, I think, at the end of last year, if I'm not mistaken. So the FATF conducted a review actually last year in June 2023 of the country's progress to address its weak points, and it says that it's making progress. So if Bulgaria follows what it has been doing so far, I think we're gonna see it off the grey list pretty soon. Let's hope for that.
Yeah, no, you've let everyone know what Bulgaria's been up to. I mean, you're probably the best one at SCBC to let us know on that, Vic. But just going to move away from the international scope of the FATF listing and focus on some more specific gambling markets. Vic, I'll come back to you on this. Can you give our listeners a summary of the recent announcements regarding affordability and stake limits? I mean, the UK have announced some proposals recently, so
yeah, sure. Well, these stake limits refer to online slots. It's important to clarify that. They are £2 for 18 to 24 years old and £5 for over 24 years old. They are expected to come into force in September. However, there have been some concerns voiced about the long-term effects on player protection, namely that players are now going to gamble with less, but instead gamble for longer, which is actually, a very negative view of those changes. The numbers show that the revenue risks vary between 730 and 460 million in losses in GGR. So we'll see what happens. I don't want to speak too much on it because our colleagues covered it in the episode. When was it? Yesterday, actually. They covered it in the episode yesterday, so go back and listen to that. It's very insightful. But the main threat is that those stakes, from my understanding, is that those stakes are gonna drive more players to the grey market, which we have to wait out and see how they play out. Yeah,
it's kind of this double-edged sword, really, isn't it? If you ask some people, where it's you're too stringent on affordability, and then they might move to those grey and possibly even black market operators. Affordability has also been one of the hot topics regarding the last year's gambling white paper. They've kind of really been honing in on trying to just protect gamblers more. So, Ted, I know they've discussed this in Parliament yesterday. What was the reason for this, and where can we expect the debate to go from here?
Yeah, I think really you've both made very good points there. You just sort of hit the nail on the head. We're talking about the grey and black markets. That's been the main concern that betting stakeholders and other sporting stakeholders, as I'll reveal in a minute, have been citing throughout the Gambling Act review. Obviously, that went on for about 2.5 years, and then we got the white paper last year. Affordability checks, finance risk checks, I should say, that's how the government are sort of branding them as, are one of the flagship measures of this. Now, throughout the review, betting stakeholders were getting quite concerned that if these checks were too intrusive on customers' personal financial details and so on, that this would drive people away from the regulated sector and more towards black market operators who don't have the same levels of player protection that the regulated ones do. Obviously, with their various ones have their own sort of technology and platforms and also have licensing requirements to adhere to from the UK Gambling Commission. Black market operators don't have that. So that was the main concern there. Sort of as an extension to this, the horse racing industry has been very concerned about how players moving away from the regulated market could affect betting revenues, which they're dependent on through the horse racing betting levy, where operators pay a certain amount of money each year. And it was the racing industry, I believe in the form of the British Horse Racing Authority and the Jockey Club, that kind of got this debate going in Parliament. They introduced a petition late last year calling for the checks to be evaluated. This received 100,000 signatures, and that's the minimum you need for a petition to be debated in Parliament, as it went down yesterday. So I've not had too much time to have a look over the debate, but from what I've seen, the key terms that have sort of come up quite regularly are the terms frictionless and intrusive, which, as we'd expect, like that's been throughout the whole sort of 2-3 year duration of this debate, they've been coming up. The MPs were more who have got sort of interests in gambling, with constituents in gambling or constituents in horse racing, as I think we saw. I believe former Health Secretary Matt Hancock has actually said a few things about this. Have cited about how checks need to be frictionless, they need to be not overly intrusive because of the effect it could have on the regulated industry and racing. But we've also seen, more on the payment side of things, open banking get mentioned yet again. The government, in their response to a lot of the questions, just sort of reiterated their point that they want these checks to be as frictionless as possible. They want them to be as sort of non-intrusive as possible, and open banking is going to play a core part in that. As for when more enhanced checks are needed, they're going to use open banking tech to see, for customers to effectively share data.
Open banking really just accelerates that process a lot more, because I mean it's only been about for about 5 or so years, I want to say. We're officially adopted in the UK first, and I think that's a real landmark moment if the government can start adopting open banking. I think that's a landmark moment for open banking, and I think the ability to just instantly access data and build more accurate, more integrated data for player preferences, such forth, and then also obviously protections for players. I think that would be that would be a really, really good use of open banking, personally.
Yeah, absolutely. I mean, and we've seen as well from coverage on Payment Expert that the government are very keen to accelerate the growth of open banking in general as part of their sort of their strategy of investing quite heavily in fintech, and the UK's financial sector as a big economic growth driver. I mean, this is something that the Labour Party published its policies on, its sort of plans for fintech and financial policies a few weeks back, and they focus quite heavily on open banking as well. And also, speaking of the Labour Party, Caroline Harris, who's the chair of the all-party parliamentary group on gambling-related harm, I believe I've got that right. She's been one of the big advocates for reform, and she mentioned open banking a couple of times about how they're going to they want to rely heavily on this for more enhanced checks. I did also note that she did say at one point, though, that after open banking, more intrusive checks could be triggered further down the line. So if open banking is kind of like the second layer of checks, with light touch checks, as they've called them, being the first layer, I'm interested to see how this third layer of, as she said, more intrusive checks could take form. What kind of technology could they use for that?
They start knocking on your door, probably.
Yeah. I think that's the worry, isn't it? That's the worry the industry has. It's they're just going to be saying to people, we need to see pay slips, we need to see bank statements, which is something that a lot of people are not comfortable sharing with. For
you can't really blame them to be fair, can you?
That's going to be the main concern going forward. I think that's going to be what. Well, the government are clearly standing their ground. They've got their plans. They want the UK GC to take the lead on crafting this in this frictionless finance risk check solution, with open banking playing a big part. I think the debate as it goes on will continue around how will the ultimate level of finance risk checks play out, and how will this impact the operator's customer journey and payments journey.
No, like you said there, Ted, open bank has been heavily used, whether it's for payments or collecting customer data information, and then that just being accelerated even further. Now you're looking at the government looking to integrate it for affordability checks. You're just seeing a seamless link now from payments and the gambling industry to come together, which has always been there. So I'll ask this, and to end out, I'll ask this to the both of you. I'll go to you first, Vic. Why should both operators and payment stakeholders be paying close attention to the affordability debate we're seeing across Europe right now?
Because it's important. It's the most important debate that's been going around in the last few years. So people should really pay attention to it.
Short and sweet. Ted, what about you?
Yeah, I mean, it's interesting you said, across Europe, we mentioned the Netherlands earlier. I think we should probably know that the UK isn't the only country going through this debate. The Netherlands are also looking at introducing their own finance risk checks. And I think as other markets develop, Germany re-regulated a couple of years ago, and there's been a lot of debates about player protection there. Maybe we could see finance risk checks as being sort of mulled in Germany, maybe in other countries like Italy, Spain, the developing markets in the US and Canada and South America. And obviously payment stakeholders should pay a lot of attention to this because of how much these will impact the payments journey and sort of the knock-on effects it could have in terms of maybe even potential opportunities for them, like I said, of open banking providers to get involved, but any other impacts it might have on the payments journey. You could also see some other, sort of fintech companies maybe finding some opportunities for partnerships or to develop new solutions there. So it's definitely one that everyone should be paying attention to, yeah. Yeah,
and just to close out, I think it's worth mentioning just the current economic climate that we're in at the moment, cost of living crisis, rising inflation. Like, I think it's worth noting that just in terms of how consumers are struggling right now to keep on top of bills, pay for goods, pay for services. And so that's a direct link to affordability as well, not just within gambling, but just overall affordability. So we're going to round out this today's episode of iGaming Daily. Ted, Vic, thank you for joining me today, and we'll see you on the next one. Goodbye.
Thank you for listening to today's iGaming Daily podcast, supported by Optimove, the #1 CRM marketing solution for the iGaming market. If you want to find out more about some of the subjects raised today, feel free to explore any of the sites in the SBC News network or check out the latest edition of the SBC Leaders magazine. Happy reading.